Good afternoon. This is Tom Aspray with the Viper Report. It's Wednesday, September 18th, just after the close and the FOMC announcement a couple hours ago. This intraday chart shows you the wild action. The S&P was down about 7 or 8 prior to the announcement of the 0.25% rate cut. Dropped down to about down 24. Dow was down roughly a couple hundred. Staged a pretty impressive rally to close slightly higher in the day, up a point. The Dow closed up 36 points on the session. The initial reaction suggests the market was satisfied with that rate cut. Many were looking for more, which I think is unrealistic and not in tune with the economic data. But nevertheless, we have seen in the past the early reaction is often reversed the next day. And in last weekend's contribution to Forbes.com, I was a little more cautious on the market based on the technicals, not the hypotheticals on what the Fed would do, and more importantly, what the tea leaf readers would decide was the real message from their comments. You can rest assured that overnight they'll be taking apart the press conference syllable by syllable. Not clear whether they're going to agree that the market should have closed strong or reverse that on the open. The AD numbers did close negative, 1351, 1576. They were over 2-to-1 negative just after the rate cut was announced. There's a link in the email to Sunday's article. Will the Fed rate cut stall the market's rally? That was my concern based on the technical action and the sharp rise in rates over the past week. As I noted in a couple of key charts, this is pretty dramatic. Many were comparing it to 2016, but as I also focused on another chart here, that rates by the election had already been rising, so the situation is really not the same. My concern, as I pointed out in the article, was that even though the NASDAQ 100 AD line had made a new high, the volume has been rather weak on this rally from the August lows. That's not generally an encouraging sign and suggests caution is warranted. If the market were to close the week lower, it would suggest a drop back to stronger support over the near term. The number of stocks closed up today, particularly the financials and the banks, there have been some real casualties. FedEx was one of them, down 13% already this week, and it's one of the 3 or 4 worst days going back to 1987. And the press conference from the CEO was pretty dismal and not looking very optimistic for their growth prospects. You can see this chart looks really negative. Those of you who have attended my free sessions can tell that, the unbalanced volume resumed its negative trend here, after topping out in September of 2018 when we were trading about 255. That's when the RS also turned negative. If you go on YouTube for Viper Report, you can see some emails to explain how the RS analysis works. It's a key technical tool that'll keep you in the strongest stocks and out of the weakest ones like FedEx. 255 then, it closed at 150 today. If we do get a further pullback towards the end of the week, the AD line analysis is still strongly positive. As we noted since the middle of August lows, this was a panic decline on the 14th. Nice bottoming signals a week or so later. And before the AD lines broke out to the upside, you can see they've made new highs here. If we do get a further correction in the market, it'll just mean a retest of the breakout level in the AD lines and create another great buying opportunity, such as what we saw in the middle of August. This will be the last update for a couple of weeks. We'll probably resume in early October as I'm taking the first vacation in over a year and I'll be out of the country. And hope you enjoy the rest of the month, and we'll touch base again in October. If you would like to learn more about my analysis, you can go to viperreport.com. You'll see a number of my articles, as well as analytical studies. If you page down from the main page, you'll see a detailed market article on market corrections. My use of the AD analysis has allowed us to pinpoint most of the turning points since the bull market began in 2009. And of course, you can always click the links for the Viper ETF or Hot Stocks Report if you're interested in one of my premium services. Check back with you in a couple of weeks. Hope you have a good rest of the month. Thanks.